So we are moving to page 2. Of the profit and loss account. Admin expenses 73.75. That is note number 5. Note number 6. The company paid the interest on debentures for the year ended 30th June 2024. So we need a working for debenture interest. This is working number 6. Debenture interest. So what is the rate of interest? Now go back to the trial balance. Where are the debentures? The fourth item, we that the debentures, you see the rate there is there, 10% debentures. 10% debentures. 10% debentures. So just take the 10%, we apply it on the book value of the debentures of, how much is that? 1, 2, 3, 4, 13 million. So debenture interest is just 10% times 13 million. How much is it? That should be 130,000, is it not? Or 1.3 million. Debenture interest. $1.3 million. That is not number 6. Not number 7. As at 30th June 2024, inventory was valued at that we effected. Then the company directors proposed that the preference dividends be paid. That we will do later after calculating the net profit. So we've effected the expenses that required adjustments. Then we go back to the trial balance and identify the expenses that do not require adjustments. These are expenses you are going to pick directly and record under expenses. Look at the trial balance. Just below purchases, we have discounts allowed. Discount allowed. So the discount allowed is how much? Discount allowed is 3 marks. What is the discount allowed? Is it 650? Yes, 650. We run through the trial balance on the debit side. Do you identify any expense? Yes, below rent expenses, you have selling and distribution. Selling and distribution. The amount is 21,710. 21,710. Bad debts written off, that one we had recorded. Admin expenses we had recorded. Do you have any other expense? So give me the total if there's no any other expense. What's the total expenditure? Total expenditure. Provision for bad debts 1937. This one. This is 3. This one. 1937. 3870. 93,870. Deduct this 9870, which is the total expenditure, from the total income. Give me the profit. What is the profit before tax? what you get there is profit before tax. 46,300. 46,300. So we deduct corporation tax. That will be working number 7. Corporation tax. Corporation tax, we read from the information, is 30%. So we take 30% times the profit before tax of 46,300. 46,300. So what is 30% of 46,300? 13,890 is a corporation tax. 13,890. Deduct corporation tax from profit before tax. That will give us a profit after tax. What is the profit after tax? Get the difference. Profit after tax. Deduct 13,890 from 46,300. 32,410. 32,410. 32,410. 32,410. That is the profit after tax. Now, from profit after tax, as you can see, the company is now paying dues. Companies are required to pay corporation tax, and the corporation tax is 30% of the profit. After paying profit, let's see what the management decided. Look at note number 8. The company directors proposed that the preference shares dividends be paid and a dividend of 10% of the ordinary shares be paid. So first of all, after paying the government, after paying Caesar what is due to Caesar, give to Caesar what is due to Caesar. Caesar has taken the 30%. Then the corporate directors, the company directors, decide to pay the preference shareholders preference dividend. And you can see, before the ordinary shareholders are paid, the preference shareholders are prepaid first. They have what you call preferential treatment. The ordinary shareholders cannot be paid before the preference shareholders are paid dividend. So first of all, we pay the preference dividend. And how do you calculate the preference dividend? You just go to the information on preference shares. Look at the trial balance. The second item there reads trial balance, 12% preference share capital. So that 12% is the rate of dividend. Is the rate of dividend. So this is number 8. Preference dividend is 12% times the par value of the preference shares, which is 13 million. So this is the 12% times 13 million. How much is it? That is the preference dividend. 12% times 13 million. George says 1560. 1560. 1560. We deduct. Then apart from the preference dividend, we read in the note number 8 that and a dividend of 10% of the ordinary shares be paid. And a dividend of 10% of the ordinary shares be paid. And a dividend. Alright, so but first of all, let's deduct that. Whatever we get there is what we call earnings attributable ordinary shareholders. Earnings attributable to ordinary shareholders. These are the owners of the company. Whatever remains, that money belongs to the ordinary shareholders for that year. How much is it? 3850. 3850. Now you can see candidates, the progression. We started with the sales, we paid all these expenses. Everyone is paid. Admin expenses, debenture interest, discounts are paid, corporation tax is paid to the government, the preference dividends is paid to the preference shareholders. Then the earnings attributable to the ordinary shareholders is 30,850,000. That is for the year. During this year, for the last 12 months, the earnings attributable to the ordinary shareholders is 30,850,000. So we go on and just follow the instructions. What else? We are on note number 8. Look at note number 8. The company directors propose that the preference shares dividend be paid. We have paid the preference dividend. We have paid the ordinary dividend. So whatever remains there is earnings attributable to share. We need to pay the ordinary dividend. Ordinary dividend. We need a working for ordinary dividend number 9. Ordinary dividend. We read is just 10%. 10% of the par value. What is the par value? Look at the information given. The first item is ordinary share capital. 78. Is it 78? Yeah, 78 million. 10% of 78 million is it 7.8 million? Ordinary dividend. Is 7.8? We deduct. There are times when the directors may decide not to pay, so that all this money is retained in the business as retained earnings. So how much is it? After paying ordinary dividend, what remains? How much is remaining? George says 23,050, 23,006, 23,050, 23,050, 23,050. Now 23,050, that is the profit for the year. During this year, after paying ordinary dividend, preference shares, corporation tax, expenses, and the rest, the profit for the year is 23,050. There are times we will be answering other questions. We'll be told that out of this, part of this is taken to the general reserve, to the revaluation reserve, or any other reserve. But the information here is this is just the profit for the year. And the profit that has not been distributed, it's retained. This is the retained profit for the year. It is profit of the year or the retained profit. You can call it profit for the year or retained earnings for the year. Retained profit for the year. Now to this retained profit for the year, we are going to add the retained earnings brought down. We have that. Yes, look at the trial balance, the third last item. The trial balance, we have retained earnings. Look at the date. Look at that date. Look at the date. Do you see the date? That is at the beginning. The 47,060 is the retained earnings for the previous accounting period. That money was not distributed. For this year, 23,050 has not been distributed. So we accumulate. We add the retained earnings brought down at the beginning. It was brought down at the beginning. It's a balance at the beginning. 47,060. 47,060. We add to the profit for the year. This one has accumulated over the past period. Then during this year, the company has also some profit which is not distributed. So whatever we get now here is retained earnings carried down. This is what will appear in the balance sheet. Retained earnings. How much is it? 70,110. 70,110. 70,110. So that's it. That is how to prepare a statement of profit or loss for a company. 10 marks. These are just 10 marks. 10 marks. Let's see the entries. In the exam, you are awarded for correct entries. 1. Where is my red pen? My red pen, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28. Close to this is close to 30 entries. These 30 entries will earn you the 10 marks, which means one tick is close to just a third mark, a third of a mark. So to earn 1 mark, you have to enter 3 correct entries. The 3, that is 1 mark. Do another 3, get another mark. Do another 3, get another mark. So that's why it's 10 marks for statement of profit or loss. Let's do the statement of financial position. Statement of financial position. Is there any question before we proceed? Any query? Any query before I rub? Any question before I rub the board? So statement of financial position. You have to write the name of the business. Hibiscus Limited. Statement of financial position as at. So For the statement of financial position, the position is at. It is as at. But the statement of profit or loss is for the year. This is statement of performance. This is statement of position. As at 30th June 2024. Statement of financial position, popularly known as the balance sheet. And the balance sheet is prepared on the basis of the accounting equation A is equal to L plus C. So this statement we are going to analyze the assets, liabilities, and capital of this company. So we begin with the non-current assets. Non-current assets. These are long-term assets. And long-term assets, we have to prepare the section using 3 columns. One, we have to show the cost of the asset, the accumulated depreciation of the asset, and the net book value. The amounts are shown in thousands. So you have to do the 3 columns. Then we go to the trial balance and identify the non-current assets, long-term assets. Long-term assets, where is my question 3? On page 3, the first one there is freehold buildings. Freehold buildings is the first non-current asset. Freehold buildings. Freehold buildings, 165 million. Now for accumulated depreciation, you can see just below the furniture and fittings, accumulated depreciation on freehold buildings is 6.5 million. That is at the beginning. You need to understand that anytime you have accumulated depreciation in the trial balance, that accumulated depreciation is at the beginning, just earnings. But here they didn't show the dates, just the inventories, which the date is shown. So accumulated depreciation that is shown in the trial balance is at the beginning. Then we add the depreciation for the year. You can see the depreciation of freehold buildings for the year is 33. At the beginning is 6.5. Then at the end, is it 33? Looks strange, is it not? Accumulated 6.5, and this one is 33 million. So we get the total. What is the total? What's it? 65 plus 30. Is it 39? It's just 39. 33 plus 6.5. Is it 39? 500. Then get the net book value. How do we get net book value? Deduct the accumulated depreciation from the cost. That will give us the net book value. What's the net book value? 125,500. 125,500. What is the cost? 83.2 million. Accumulated depreciation, we take the 33, look at the trial balance. Accumulated depreciation, furniture and fittings is 33,280. We add the depreciation charge for the year, which is 10,400. 10,400. Accumulate it. This is for the year, for the 12 months. At the beginning, it was 33,280. The total is the accumulated depreciation. How much is it? This is 43,680. Is it 43,680? If it is 43,680, then what is the net book value? Give me the net book value. I don't think there is any other non-current asset. So do this total, close. Do this total, close it. Give me the figure there, then the total, don't close it. 39,520. 39,520. Total net book value 165,020. 165,020. Then we add goodwill. There is a goodwill somewhere. Goodwill, the second last item, 2,800. Give me the total. Add the goodwill. Is it 185,820? So then we have we add the current assets. To the non-current assets, we add non-current assets. We begin with the inventory. Inventory under additional information. Closing inventory is how much? Closing inventory, not number 7. Inventory, not number 7. We write it here. 70 what? 7280. Then we have accounts receivable, which we calculated. Those are working for accounts receivable. How much was it? The working. We calculated it. The balance. Give me the balance on accounts receivable. We deduct provision for bad, the one at the end. How much is the accounts receivable? Not the one in the trial balance, but the one we had a working for here. Prepaid rent is asset. Prepaid rent from the not number, prepaid rent, prepaid, not number 452. It is 52. Prepaid rent is an asset. I'm waiting for the accounts receivable. Anthony, what is the accounts receivable? John M. What is the provision that we calculated? 42,770. This is 42,770. We deduct, was it 1937, the provision? Was it 1937? George, you are the one who corrected us. The provision at the end. Yes, so give me the net. You have to deduct 1937 from that amount. Give me the net. That will be the accounts receivable. So it is 42,770 allowance for doubtful debt. George, it's supposed to be the one at the end. Was it 1937? It should be the one at the end. Allowance is not, we are not deducting the increase, but the allowance at the end. The balance carried down on allowance for doubtful debts was 4277. It is 4277. 42, and it is true because it is 10% of 42,770. 10% of 42,770 is 4277. So get me the net. $38,493. 38,493. So I've not seen any other current asset. Give me the total. In fact, we have an overdraft. So there's no bank here. We have an overdraft, which is a liability. It will appear on the section for liabilities. So what is the total? Total current assets. Then we get the total assets. 45,825. 45,825. To this 45,825, add the non-current assets to get the total assets. This will be the total assets. These total assets are financed by assets and liabilities. I mean, financed by capital and liability. Capital and liabilities. So you have ordinary share capital. First we have ordinary share capital. How much is the ordinary share capital from the trial balance? 78 million. Then we have the 12% preference share capital. 12% preference share capital of 13 million. Then we add the share premium. Do you see the share premium? The share premium is 10,400. Share premium 10,400. Next we have the retained profit from the profit or loss account. That retained profit of 70,110. 70,110. The retained profit is part of our shareholders' equity. So how much is it? This total. So these are capital. 231,645. 231,645 is the total assets. 231,645. 231,645. Someone says that is the total assets. 171,510. 171,510 is total equity. Then we add to equity, we add liabilities. Which liabilities do we have? We have long-term liabilities, 10% debentures, 13. Is it 13 million? 10% debentures, 13 million. Then we have the current liabilities. Current liabilities, let me just indicate this is long-term liability. Liabilities, we have long-term liabilities, 13 million. 10% debentures. So this is 10% debentures, 13 million. Then we proceed here. To prepare now going to record the short-term liabilities. Short-term. Accounts payables. Accounts payable. How much is the accounts payable? Look at the fifth item is accounts payable, 19,240. 19,240. Then we have quite a number of short-term liabilities and additional information, beginning with the administration expenses due. Accrued admin expenses. Accrued admin expenses, that is a liability. It has not been paid. 95. Unpaid expenses are short-term liabilities. So apart from admin, we have which one? The company paid the interest on debentures, so they ended 30th June 2024. When was that? Yeah, that one has been paid. That is not due. But we have ordinary dividend. We have preference dividend. It has not been paid. Preference dividend has not been paid because we read from the additional information that the not number 7, not number 8, that the company proposes. The company is proposing. It means the dividend has not been paid. It's just proposing. So how much is the preference dividend? The preference dividend is 1560. It has not been paid. Together with the ordinary dividend. ordinary dividend has not been paid as well. The company only proposed 10% of ordinary shares to be paid. Ordinary dividend 7,800. Do you have any other liability? Yes, you have the bank overdraft. Bank overdraft is a liability. The company is owing the bank 3250. You can see it is on the credit side of the trial balance. 3250. Bank overdraft is a liability. Do you have any other? Can you see any other? Not number 2. Can that be factored in? Yes, not number 2. What do you think about number 2, George? We've also not been told that corporation tax has been paid. So the corporation tax 13,890 is also a liability. It has not been paid. It's called corporation tax payable. If it's not paid, we call it corporation tax payable. The amount there is 13,890. Then there was also debenture that was not paid, debenture interest. Okay, debenture interest. The debenture interest is here somewhere. Debenture interest is the rate is 10%. Debenture interest is 10% of 13 million, which is 1.3 million. So give me this total short-term liabilities. Short-term liabilities. 47,135. Someone says 47,135. Now to this 47,137, please add the long-term liabilities of 15 million. Then add shareholders' equity of 17 million. This is 171 510. 171 510. So this will be the total capital and liabilities. What is the total? It should total 231,645. Is it 231,645? 231,645. So the total capital and liabilities must equal the total assets. This must agree. How many marks? These are just 6 marks. 6 marks candidates. All that work is meant to earn you 6 marks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31. These are 30 entries to earn you 6 marks. So 30 over 6, 1 over 5. So to earn 1 mark, you have to make 5 entries. 1, 2, 3, 4, 5, 1 mark. 1, 2, 3, 4, 5, 2 marks. 1, 2, 3, 4, 5, 3 marks. 1, 2, 3, 4, 5, 6, 4 marks. 1, 2, 3, 4, 5, 6, another 5 marks. Then 1, 2, 3, 4, 5, 6, 6 marks. So then, thank you. Bye bye.